But switching focus to the financials because they are the pick of the pack today. And how is 2025 going to pan out? This is a note coming in from Jefferies. Their view with regard to how 2025 will pan out, largely positive when it comes to banks. Now, they start off by talking about regulatory. Now, what has the risk management and some of the measures of risk management which RBI has taken, what has it caused? One is it's narrowed the gap between the loan growth and deposit growth, which is definitely a positive. It slowed down unsecured loans, which is again a positive because that's a pocket where there has been asset quality issues as well. And third, what it has actually also done is it slowed down GDP growth, which not sure exactly how healthy it is in the current scenario. But therefore, Jefferies believes that that's going to change in 2025. It will be the year of easing, is what they call it. Rates may fall by 50 basis points odd from here. They see easier and stabler norms, and which all of these point to is it will likely aid the banking system. With regard to margins, 10 basis points lower on margins can impact earnings by 3 to 8% is the thesis they are playing out. Why is this relevant? Because a 50 basis point decline in the repo will likely impact margins temporarily, if not in a large fashion, but at least temporarily for a quarter or two in some banks. Second one, with regard to growth, loan growth is expected to slow to 11 to 13%, and the ones which will stand out will be the ones which can continue to grow at a faster clip. I'm talking about the banks which can continue to grow at a faster clip. And the higher deposit growth banks which can eat up market share in deposits, will also lead in terms of loan growth. That's what the Jefferies view is. With regard to asset quality cycle may be shallow, 2025 and FY26 as well. Now, but smaller banks will be more impacted and have been more impacted. They will take more time. But what do they prefer? Valuations attractive within this pocket because EPS growth gap versus the market is narrower, is what Jefferies is saying. That's the real case they're trying to make. Private banks are more preferred. The larger banks within the private banks are also more preferred. And therefore, their picks, ICICI, Axis, HDFC, and within the PSU basket, SBI. They've upgraded a Kotak to a buy, and they've downgraded a BOB to a hold. Various picks brought out by Jefferies, but largely they seem to be positive with regard to Indian banks, and they believe 2025 will be that year.
Well, strong moves certainly for some of these stocks to keep an eye out for, but it's 7 minutes to close. So